Hello and welcome. You have tuned into In Your Interest here on News 9 Live. I am Krishna Kumar, and the big story we're beginning this show with is say hello to the brand new ULI or Unified Lendings Interface. After the phenomenal success of the UPI or the Unified Payments Interface, it's now time to see if that can be replicated with the ULI. The Reserve Bank of India's Governor Dr. Shaktikanta Das introduced the Unified Lending Interface or ULI, a technological platform designed to transform lending landscape in India, currently in its pilot stage. Now, according to Governor Das, RBI expects the ULI to transform the lending scape much like how UPI transformed the payments ecosystem. The ULI is designed to streamline and accelerate the lending process, making it easier and faster for borrowers, particularly those in the underserved sectors, to access credit. Seamless integration of data. The primary goal of the ULI is to simplify and speed up the process of obtaining loans. It does so by simplifying digital information flow between borrowers, lenders, and various data providers. And the ULI facilitates the integration of diverse data sources, including government databases and private data providers. And by integrating various data points like credit history, land records, and other financial information, ULI allows lenders to make more informed decisions quickly and efficiently. And this system will be connecting with Aadhaar, eKYC, PAN database, and account aggregators as well. By combining these various inputs, ULI will reduce the time taken to conduct loan assessments by an extremely significant degree, and particularly mainly for small and rural borrowers. Micro lending is what we're talking about over here. We have my colleague Karthik Malhotra now joining us here in the studio. Karthik, talk to us. One is a UPI, as recently has notched up transactions of over 20 trillion rupees in a month, or a 20 lakh crore rupees. It's a kind of phenomenal success. It's a global model being, it is being copied by other countries outside of India. It's India's famous exports in the recent times. The ULI, on the other hand, is not as simple as financial transactions, isn't it?
So, I think two words really come to mind, Krishna, when we talk about, and in fact, a third word is frictionless, which Shaktikanta Das had in fact announced in August last year. But two words that really stick out right now for me in this whole ULI story. Number one is transparency. And transparency for the end borrower, who knows exactly what he or she is getting at what terms. And the second is democratization. So I think this is democratization of the entire lending ecosystem, pretty much on the same lines as UPI had transformed and democratized the entire payment transaction space. Now, what I make of this is that, number one, it is still in the pilot stage. So I think disclaimer number one, I haven't been able to see the interface, because I think at the end of the day, any tech platform or any new tech product that comes out, it needs to be easy to use. And I think UPI showed us the way of how quickly, how efficiently, how seamlessly payments can be made. So whether it is by inputting a mobile number or by just scanning a QR code, you can pretty much transact with anybody, any retailer, any person-to-person transaction, or anything that you want to buy online. UPI is as simple as that, right? Okay. At best, a notification comes to you, you click it, open, you enter your PIN code, and there you have it. The transaction is through. Now, in the case of ULI, I think what it really hopes to achieve, and I think given our track record with all digital public goods or digital public infrastructure as it is called, I think our track record shows us that we should be able to cross those multiple loops and those multiple bridges to ensure that the seamlessness is kept intact. Number one, it is going to first digitize all financial documentation of every customer who hops onto the ULI platform, which means your credit history, which you mentioned, your credit score. How well do you rank out of that 900 credit score? What is your ranking? Are you credit worthy at all or not? So your credit worthiness, your credit history, the number of successes you've had in repaying previously taken credit, plus all your other assets, which at some point could be monetized to ensure that you are in a position to repay your loan. At the other end, I mentioned transparency. I think transparency comes into being because right now, what is the typical process? As a small and medium enterprise, you want to go to take a loan to expand your business, reinvest that capital to grow your business. There are multiple doors that you need to knock on. The first door is the banks. The banks will check all your credit history, everything else, but then you need to furnish a lot of documentation to prove your credit worthiness. Then there is your credit score. So again, you've got to go back to CIBIL or another rating agency, which tells the bank that, yeah, this person is eligible for a loan. And then, of course, the bank itself is going to design a package and offer you a loan at a certain rate of interest. And you as a borrower don't have too much negotiation power. I think what ULI is going to do through this whole democratization of loans and transparency of lending is that it'll give you, the end borrower, a choice, because all your documentation and your creditworthiness is already there on the platform as part of the API pulls that the app is going to do. But you get to choose that, hey, this is what a bank is offering me, this is what an NBFC is offering me, this is what a fintech player is offering me. Right. These are the terms and conditions, and in one screenshot, you're able to very quickly assimilate all the various options available to you, and perhaps it should be as simple as click and get a loan through UPI back in your account.
Right. As Karthik was talking about, this is said to be an open and interoperable platform. The ULI operates an API or application program interface on an app, which implies that financial institutions can integrate into its network in a plug-and-play fashion. An open, interoperable architecture can connect multiple stakeholders, including banks, non-banking financial companies, or NBFCs, and financial technology firms, fintech firms, and other financial institutions as well. Now, ULI is also said to have consent-based data sharing. Now, its platform can have lenders access a comprehensive consent-based digital profile of borrowers, enabling them to assess creditworthiness with greater accuracy. Borrowers can share their information with lenders through a secure consent mechanism. This ensures that personal data is protected and only shared with authorized entities. It also obviously increases access to credit by reducing the turnaround time for loan approvals and making the process more transparent. ULI is expected to significantly increase access to credit for underserved populations, including small business owners and rural borrowers mainly. The ULI platform has the potential to revolutionize the lending industry in India, which, like how UPI transformed digital payments, but by making the lending process more efficient, transparent, and inclusive, ULI can also help bridge the credit gap, particularly for small and medium enterprises or SMEs and rural borrowers who have traditionally faced challenges in accessing formal credit. Karthik, at this stage, it looks like ULI is the kind of online Bandhan revolution, if I may, because what Bandhan did to micro lending, in Bangladesh, and how that model was, adopted across
Bangladesh
the world.
was Grameen Bank. But yeah, I know what you're talking about. I think you're pretty much talking about microcredit. You're talking about these self-help groups which form these little small banks which through this contributory method helps service the requirements of micro borrowers. So I think at one level it is fair to draw that comparison, Krishna, simply because for somebody who is living in a rural area, let's say running a very small corner store, a kirana dukan as it is referred to, or a small vendor selling daily items, really maintaining a formal credit history, especially if the transactions happen in cash, is very difficult. So if that particular rural entrepreneur wants to go knocking on a bank's door, it is not impossible or implausible to imagine that the bank is going to turn that person away. Similarly, if you go to an NBFC, or if you go to a microfinance corporation, see, NBFCs have higher interest rate than banks because they obviously take on these small borrowers in their books, and they know that the risk that they are running is much higher than banks would, because banks, ever since the cleanup of the NPAs has come into action, banks try to turn away small borrowers, right? NBFCs, on the other hand, still accommodate them, but the microfinance institutions like Grameen Bank, offer credit at a much higher rate of interest. Now, the problem with all these models is that there isn't one single platform that tells you everything you as a lender need to know about the potential borrower. With ULI, I think all that documentation and the digitization of the documentation pertaining to the financial assets owned and the credit history of the potential buyer just comes right in front of you. So, on a rating of, let's say, 10 or 900 or whatever, what the potential of that person to repay the loan really is, and on the basis of that, the borrower now has the advantage to choose between the various lending institutions on the basis of rate of interest, on the terms and conditions, on the key fact sheet documentation that this is the loan that I want to take, and go ahead, click and get the loan.
Right. thank you for correcting me over there, the Grameen Bank in Bangladesh, at a time when Dr. Mohammed Yunus is now heading the country. That's the power of microfinance, if I may. And you rightly pointed out the fact that the big banks of the country have been found wanting when it comes to, that's the reason why you have a term called underserved sectors.
That's right.
That's because we might be having some of the biggest banks in the country, but they are choosing to stay away from certain sectors for multivarious reasons, their own bottom lines to start with. But do you think that at this stage, Dr. Das has announced the fact that the pilot stage is already in progress. It's been in progress for nearly over a year now. It's been a year since that's been happening. So which means that there is no timeline on when exactly it's going to be launched. Going soon. But the moment it comes, considering the success that UPI has had in terms of handling the volume of transactions, without too many breakdowns, with one of the most seamless integrations possible across payment platforms, and that seamless integration and that platform's ability to handle volumes will be crucial for ULI's success.
You're right. So I think when it comes to data management, when it comes to managing this large scale of transactions, both in volume terms and in the pure number of transactions happening parallelly across the country in different pockets, I think there is resident experience with NPCI governed by the Central Bank, the Reserve Bank of India, in ensuring that the tech is available and the tech is tested to make sure that those transactions don't fail. Right, and I think in any financial transaction, the success rate of the transaction going through is absolutely paramount. Right. Having said that, I think UPI, and I'm a big fan of UPI, don't get me wrong, but
we all are.
We all are. And data tells us that, I think 40% of all transactions that happen in India happen digitally today, as opposed to just that number being 10% pre-demonetization of 2016. Almost 80 to 90% of all digital transactions are UPI. But the skeptic in me also believes that UPI is perhaps a once-in-a-lifetime hero product. Right. It is very difficult to replicate that scale of success every time you launch a new product. For example, we have seen the RBI running pilot phase projects of the central bank digital currency or the e-rupee. Right. We've been talking about it. In fact, we've done stories on that. Krishna, you've done stories on that as well, where we haven't really seen CBDC really become a tool as popular as the UPI. Nowhere close. So I think it continues to be in a pilot stage. At the end of the day, it is easy to monitor and manage transactions from bank to bank because there is a central governor for, and a regulator for those transactions, which is the RBI. If RBI tells all the banks to do it, you go ahead and you do it. In the case of lending, you have banks, you have NBFCs, but you also have fintech. So, the point is, we don't know for sure, is RBI the regulator for fintech platforms as well? Right. So, overall, I think replicating the success of UPI is going to be difficult.
Fair enough.
But we have tried and tested knowledge available, and we have the tech play absolutely plug and play available for this to be able to ride on those past successes. If not replicate it, at least function efficiently. And I don't think the transaction space, the kind of volumes that you see, you will not see anything close to that in the lending or borrowing space. But yeah, at least I think the tech and the plug and play availability is something that we should not worry about.